I am very pleased and honored to have one of my good friends, Ken Stern, joining me today for an open and frank conversation of flow through shares for sure, and probably a few other things that we'll encounter in our chat today. I have known Ken for a good 25 years. Our neither of our hair has changed in that period of time. Ken is a veteran financial advisor with 33 plus years of experience. And when it comes to this area that we're going to talk about today, Ken is an encyclopedia of knowledge, and not just that, practical use. And I cannot sing his praises enough for his ability to deal with clients on a respectful and educational fashion. He has worked on a number of files with me right across the country where we're providing some pretty significant tax relief to entrepreneurs, to individuals. We're going to talk a little bit about the philanthropy space today, and then maybe we'll work some politics in towards the end. But Ken, it is a real pleasure to have you here today. If you want to tell our vast and growing audience where they can find you, we can commence our discussion.
Awesome. Well, thanks for the intro, Trevor. You're much too kind, but I do appreciate it. I am in Toronto. I am on Zoom. I'm on Teams. My website kenstern.ca, and I also have a YouTube channel with a few videos describing what I do. And I work across the country. And one of my mottos is, if you're working, I'm working. So if you're in the West Coast and it's 5 p.m., I don't have an issue having a meeting that starts at 8. My time.
I live in that same world, but I can assure you that I get icy glare from she who must be obeyed when I take a call that might be a BC call and it doesn't coincide with our wonderful central Canadian time zone. But I'm living that as well. Uh, you're a specialist in flow through, and a lot of folks are using it. A lot of very and not so much sophisticated, but astute financial planning is involving the use of flow through, and flow throughs changed over the years. So many moons ago, and I still didn't have hair when I was a financial advisor. We used to always gather, I think once or twice a year, at this lovely breakfast in downtown Toronto, where they would come in and extol the virtues of flow through because it would get rid of your income a problem or tax on income problem, but frequently you were left with an illiquid share that would sit in the account for years and years, never to be removed. You're going to tell us all about how that has completely changed and why flow through is an answer for just a great myriad of folks right across the country.
Yes. Well, as a financial advisor, uh, really the only flow through product I was aware of was through a limited partnership. And there's still a bunch of companies that offer flow through via limited partnership. And typically, you don't get liquidity, meaning you can't sell those shares for 12 to 14 months. That's what they call quick turnaround, fast liquidity, etc. And to be honest, that's not really a very good plan. As an advisor, I did one flow through limited partnership, and I took $50,000 of my wife's money. And by the time we could sell it, it was worth $5,000. And so, yes, we got wonderful tax breaks, but it was a disaster. And one of the worst parts of that, Trevor, was what I call statement risk, which you alluded to. Every time she got a statement, she reminded me what an idiot I was.
I get that from other things.
I vowed never to go near them again. However, when I sold my investment business in 2017, somebody told me about a different way of structuring a flow through deal, which I did participate in and found that virtually all the risk is removed and the tax benefits remain. And so, after a fairly brief retirement where I got pretty bored very quickly, somebody suggested maybe investigating uh, getting into the world of flow through and maybe distributing it to my advisor community that I was already quite familiar with and reasonably well known. So it's been about 3 years. I do, as you mentioned, work with people across the country between investment advisors who refer clients to me and people directly. So we remove the primary risks, making this a purely tax driven transaction that can save an individual tax. It can help corporations by having the major shareholder remove capital from the company using the capital dividend account, which is, of course, tax free. And then there's the entire philanthropy side of how this works as well.
So why don't you walk through sort of a common case that you're running into? It's usually somebody who has pretty considerable income and they're walking into that wonderful 53.53% buzzsaw that we have in Ontario called the top marginal tax rate.
Yes. So, as I said, I deal with a lot of advisors and they provide me with details about someone's income, any other deductions they may have, um, any credits, et cetera. And we analyze what an optimized amount of purchase of flow through would be. We always have to keep in mind on the personal level something called AMT or
Right.
alternative tax. And it's a little complicated to calculate it. We have some people in our back office who help do that as well. So you can't reduce your income down to zero using flow through shares. And the rules have changed recently, kind of limiting the amount one can purchase. There's no AMT on the corporate side.
Right.
You can drive the corporate tax bill down to virtually zero. But this works best against the highest taxed income. So, first of all, this transaction is only available to accredited investors. I'm not going to go through the definition of an accredited investor, but there's limited supply and there's a limited clientele, although there's many, many accredited investors in Canada who aren't aware of this. And obviously, if they're not aware, they're not taking part in it as well. So we will help people optimize. We're talking usually maybe in the 20% of their income that we could actually offset. Uh, yeah, that's pretty much how it works.
And and most of the issuers are now, it used to be oil and natural gas, but unfortunately the anti-energy bent of the past and hopefully not current federal government has sort of driven that from the marketplace. But who are it's exploration credits. So what companies, what areas are you seeing them coming out in?
So there's also exploration and development credits, and they're two different tax regimes. Uh, we're seeing gold in particular right now, given the price.
Right.
So companies are reluctant to issue new shares when their share price is depressed because that dilutes the existing shareholders more than they might otherwise have to. So prices are up in the mining sector. Critical minerals have become a very hot topic. In fact, in 2022 federal budget, the government increased the investment tax credit that's usually available with flow-through shares. That's a 15% tax credit, not a deduction, a credit. When the company is exploring for critical minerals, that credit goes up to 30%. So it's very significant. And clearly, the government is supporting this regime by making various announcements. They reiterated their commitment to the flow through regime in the most recent pronouncements because we don't have a budget. Um, and
And no one seems to be upset about that, which is disconcerting.
well,
So,
not no one,
well, we are.
not no one exactly. So it's a very specialized area. Uh, it's been around since the 1970s. I often do get people saying, "Well, this is too good to be true. How about GAR? Does it apply? Why does the government let you double dip if you're doing a donation?" Uh, these are all things that have been tried and true, and we can talk to any accountant. We have senior accounting and legal professional references that we can provide, et cetera.
Well, and to speak to that, I know, I mean, I work, as you know, across the country, and invariably my work involves a client's accountant. And I can attest to the fact that these strategies, these structures are being used not only by clients, but by senior accounting professionals right across the country. I bump into them in Montreal, Toronto, Calgary all the time. So if there's any endorsement for just use by smart people who know how this stuff works, I'm seeing it firsthand and on a daily basis.
Yeah, yeah, no, and I do run into accountants who, think it's too good to be true. And the fact of the matter is, they're not open to learning why it is a valid transaction.
Mm, that's true.
At that point, I say, never mind. Um, but one thing I want to mention, Trevor, is that supply is very limited. So I often hear, how come I never heard of this before? Well, the reason is that there's not that much in the way of distribution. The deals are considered a private placement. So you're
Mhm.
buying shares directly from treasury of a company. And if nobody's issuing new shares, especially if and when the prices are down, the share prices are down, then there's not much deal to be had.
Yeah,
I
exactly.
spend a lot of my time educating people, analyzing their position, making recommendations, and then essentially taking a reservation list so that when a deal is announced, and we usually only have about 2 weeks from the announcement to closing, uh, we can be on that immediately, and we'll send real numbers to people because we can't send real numbers until we have an actual deal. But the numbers we work with in the sort of research phase, we'll call it, are always relatively close to, a deal that might come out because they're all from prior deals.
Exactly. Exactly. Now, one thing I know you and I both share is a love and belief in philanthropy, and we've got a lot of pretty smart friends in the financial services industry, and they're certainly pounding the table and showing folks a way forward with this. I talk to clients and I include it in almost all of my memos. I cannot remove the federal government as your principal creditor with your children. I'd like to, but I can't. The only way we can really do it is with strategic philanthropy, and you're really unifying tax planning with just good human conduct. Can you speak to the use of flow through in philanthropy?
Yeah, it's a very powerful tool. Um, when you donate $1, and we always talk about the top tax bracket because that's the most effective. Um, so when someone in the top MTR, marginal tax rate, makes a donation, and we round it down actually to 50%, just for the ease of discussion. Um, it costs you 50 cents to donate $1. And that's a pretty good deal. It's nice to get that write off. With flow through shares, we start at 25 cents on the dollar.
Mhm.
And I can explain how that works. It's a little bit involved, so maybe I'll save that for now. But we can drive the cost per dollar of donation down to a penny.
Yeah,
And
exactly.
so you need a fair amount of capital to start with when you drive the cost down as low as a penny. But everything except 1% comes back to you either in cash as the proceeds of sale from the flow through to a liquidity provider
Mhm.
or via the tax benefits. So I helped someone make a $100,000 donation, and at the end, it cost him $1,000 out of pocket.
It's
Very
fantastic.
powerful. It's the kind of leverage that you can use, and if you want to get your name on a building, this is one of the ways to do it.
It's fantastic, and I mean, we've talked about, I pound the table, Leviathan must be stopped. Doesn't mean you need to go to the barricades. The way that we curtail the avarice of government is to starve it, and if we can do it in such a fashion that we're unifying not just common sense tax planning, prudent tax planning, because these are long established strategies, but also to bring in that to do good, uh, and that's not to enrich the government. I can't tell folks enough, this is something they need to be looking at. As I said, you don't have to be on a one man crusade to to storm the Bastille. Government needs to be curtailed. We need to return to an age of personal responsibility and individual freedom and celebration of profit and hard work and all those wonderful things. But this is a means by which everyone, or not everyone, but people with some degree of affluence can step up, help themselves from a tax perspective, and at the same time do the right thing by denying our friends in Ottawa more of the king's shilling. So,
Yeah, but Trevor, I talk about large donations like that, but I have a little anecdote about a much smaller donation and how and why it works. So I have a client who was a client of mine when I was an investment advisor.
mhm.
And he runs a very small charity, and I was talking to him for quite some time about it, and he seemed interested. And I finally got him to sort of come on board. And I said, well, look, why don't you make a donation yourself? See how it works, understand the client experience, and maybe you'll be in a position to refer this to your donors. He said, well, I would do that, but I'm not planning on making much of a donation this year. He said, maybe a couple of $1,000s. I said, okay, how much is that $2,000 donation going to cost you? He said, $1,000. I said, what if I could make that $1,000 into a $10,000 donation? He said, I'm amazed. I'm in. And of course, he did that and he became a client. So I just want to make sure, it's clear that you don't have to be looking at donating $100,000,
No, no,
right?
agreed.
Uh,
Yeah,
and typically, I think a minimum investment or transaction might be a 25K,
yeah.
because I just don't think it's going to move the needle with
Yeah.
less, right?
Yeah, exactly, yeah, exactly. And I think charities are now they're astute. They're getting this stuff. I know I've had conversations with a number of philanthropic organizations, and they're starting to really embrace the whole flow through strategy because they know. And again, they go to their benefactors and say, "Listen, it's a choice. Do you want to do the right thing and help out with something you believe in, or do you want to give it to the government and see it squandered?" And I think it's an easy answer for most folks to come up with. The other thing we talked about in the past was, where we have an issue where, traditionally we've used life insurance and the ability to create capital dividends to do postmortem planning, estate planning to get taxes down, and I can go on for hours about that. You in the past have told me that there is an application for flow through because let's face it, a lot of the time when you need to do the planning, you're older and your health wasn't what it was, and getting insurance isn't always the easiest thing to do.
Right. Well, there's a couple of points about that. The first is that, using life insurance to get money out of your corporation is fine, but you're dead. So
Yeah,
somebody else is going to get that money. We do a transaction that delivers a capital gain. I'll explain how that works in a moment, but that delivers that CDA credit when you're alive, right? So when you buy flow through share, let's call it. We'll use 100K only because it's round numbers. It's easy.
sure.
You write off $100,000, and now you're going to sell the flow through shares to what we call a liquidity provider. They buy it from you the day you purchase it from the company. So it's a simultaneous buy and sell at prearranged pricing. So that makes this kind of foolproof. Uh, so then you're going to sell the shares, and let's say you're going to get about 35% haircut. And the reason you're going to sell for less is that the issuing company issues the shares at a premium because they know there's a tax benefit embedded. And the person or entity that's going to buy it from you needs an incentive because they can go and buy these shares on the open market. So you have to discount those shares. So let's call it 30 to 35% discount between what you've bought. Let's call it 100K. And the proceeds of sale, which you receive, will use $65,000. Now you've sold those shares, so effectively you own them for zero. Your adjusted cost base on those shares is zero. So when you sell to this liquidity provider, $65,000 cash that you receive, that's a capital gain. So 100% of the proceeds of sale are considered a capital gain. When that's done inside a corporation, half of that capital gain is credited to the capital dividend account, meaning the shareholder can withdraw those funds tax free. I had an instance where a business owner wanted to buy a boat and he said he needed $400,000. So we reverse engineered an $800,000 capital gain. He had to write obviously a fairly large check, about 1.2 million. But when all was said and done, he had a $400,000 CDA credit that was able to deliver that money so he could buy his boat from his company without paying tax on the funds that came out.
Hmm, brilliant. Just as a just as a caveat, if you are a US taxpayer living in Canada, the American tax authorities don't recognize capital dividends. So we need to sit down with your cross-border expert and figure out
Well, they don't.
engine.
Yeah, they don't recognize the flow through deduction either.
Right. So,
Yeah. So I've kind of looked at this, and a good friend of ours, who's a cross border specialist, we said, "Nix,
yeah. So,
not gonna."
but it works for a good slice of the Canadian, entrepreneurial and professional population for sure. Um, it's midsummer. What are you seeing? What's bugging you? What's making you happy these days?
So I'm finding it very quiet. People are on vacation, not thinking much about tax, although this is a good time to be doing that. Um, so I spend my time, doing research, talking to clients. Um, it's an interesting time, but we are seeing a lot of activity. So we have product.
Yeah, exactly.
Interestingly, when we have product and we have more than we have in the way of demand, we still have to close the transaction. So we have to come up with the money that investors haven't come up to the table with. And so we own these shares with the embedded tax benefits and put them into our own limited partnership, which is just a single issue.
Right.
All the tax benefits are exactly the same. And the benefit of that is that you don't have to come up in the example we used before with the 100K. You only have to come up with the 35K, which is the net out of pocket.
Mhm.
So that's a pretty good deal. The other thing that has got me very, very intrigued is that uh, the present government has made some representations about extending the flow through regime to high tech startups. So, AI startups, other high tech industries, which would be really great for capital formation. If somebody owns the shares in a brand new tech company, they might not even want to sell them right away like they do with the flow through shares. They might
Exactly.
want to buy them and write them off. So you own these tech shares for zero, and who knows, you might hit a gusher with one.
And it and that's, that's heartwarming in the sense that, I mean, I've decried liberal tax policy for the last 10 years. It's the worst we've ever had. Perhaps with the new PM and elevation of certain, folks to ministers' positions, and there's some new folks in there. There's a few that are competent. There are a whole bunch that aren't, and we can go on and on and on about it. But there is, I think, the understanding that the Income Tax Act and the enforcement of the tax regime has been absolutely a sort of Damocles hanging over, entrepreneurialism, over aspiration. And if we have these measures that can come in, and I pound the table on a patent box and things like that, um, there are some signs of hope. Now that said, there's a report out last week that $93 billion has left the country since Mr. Carney's election. So the onus is still on him to show that he's not, uh, a mature version of Trudeau. He has the posture of Mr. Burns, as we joke. But so far, I think Canadians are prepared to give him the benefit of the doubt. But these types of measures, if these things can be encouraged, uh, I think that's beneficial. That said, I still want a wholesale, rewrite of the Income Tax Act, and one day, whether it's forced or decided upon, it's gonna have to happen.
Yeah, well, when you calculate the 53.5% and you add on top of that the HST and property tax and, municipal taxes and, all of the other things, the level of taxation in Canada is just beyond the pale.
And you're not
And
getting anything for it. The civil service is an unemployment alternative. You look at Europe where they have a history, generational tradition of maybe delivering services. We're not getting anything close to that. We have a situation where, Leviathan has absolutely found a lovely nest here in Canada. Too many Canadians are sitting at home doing nothing. Government continues to grow and grow and grow. Now, again, Mr. Carney's made sort of noise about cutting the civil service, and let's so he takes out a great Claymore and does it.
yeah, well, he makes a lot of representations, but, the proof, as they say, is in the pudding. So, look, like you said, we who oppose the liberal agenda are willing to give him some rope,
Yeah,
and let's hope he doesn't hang himself and just pulls us all up from our bottom,
exactly.
right?
Well, with that, my friend, enjoy the rest of the summer. I understand you have a bottle of Maker's Mark with my name on it. Doug
Yes,
Ford,
sir.
be
Just
happy.
waiting for
So
you.
I will show up dressed like Foghorn Leghorn or Boss Hog or something like that, and I'll drink it with you. But once again, thank you so much for spending some time with us today.
My pleasure. Thanks for the opportunity, Trevor.
Thank you.